What is a health reimbursement arrangement, HRA? HRA is an employer-funded plan that reimburses employees for qualified medical expenses and, in some cases, insurance premiums. Employers are allowed to claim a tax deduction for the reimbursement they make through these plans, and reimbursement dollars received by employees are generally tax-free. How HRA works. A health reimbursement arrangement is a plan set up by an employer to cover medical expenses for its employees. The employer decides how much it will put into the plan, and the employee can request reimbursement for actual medical expenses incurred up to that amount. All employees in the same class must receive the same HRA contribution. An HRA is not an account. Employees cannot withdraw funds in advance and then use them to pay medical expenses. Instead, they must incur the expense first, then have it reimbursed. Reimbursement at the time of service is possible if the employer provides an HRA debit card. An employee who uses up all the allocated funds in the HRA before year-end will have to cover any subsequent health bills out of pocket or with the funds in flexible spending account, also known as a flexible spending arrangement, when available, or a health saving account for employees who have a high deductible health plan. Maternity clothes, gym membership fees, marriage counseling, and child care are among the expenses not covered by a health reimbursement arrangement. Types of HRA. There are a few kinds of health reimbursement arrangement. Qualified small employer health reimbursement arrangement. A qualified small employer health reimbursement arrangement is a health coverage subsidy plan for employees working for businesses that employ less than 50 full-time workers. Also known as a small business HRA, a QSEHRA can be used to offset health insurance coverage or repay medical expenses that would be otherwise uncovered. The yearly limits are set by the Internal Revenue Service (IRS) for 2021. A company with QSEHRA can reimburse individual employees for up to $5,300 per year and employees that have families for up to $10,700 per year. The money that is reimbursed is tax-free for the employees and tax-deductible for the employers. Individual Coverage HRA. ICHRA is relatively new, having only been available since January 2020. Previously, HRA could not be used to pay for individual health insurance premiums. But as of January 2020, the government allows employers to offer their employees a new type of HRA called an individual coverage HRA instead of group health insurance. Employees can use this HRA to buy their own comprehensive individual health insurance with pre-tax dollars either on or off the Affordable Care Act's health insurance marketplace. Individual coverage HRA can also reimburse employees for qualified health expenses such as co-payments and deductibles. Whether or not your ICHRA makes you eligible for a premium tax credit to help pay for health insurance coverage under the Affordable Care Act depends on whether your employer's ICHRA meets minimum standard for so-called affordability and whether you choose to opt in or opt out of the coverage. Exempted benefits HRA. In addition, employers that continue to offer traditional group health insurance can offer exempted benefit HRA to reimburse employees for up to $1,800 a year in qualified medical expenses. Employees can enroll in an exempted benefit HRA even if they decline group health insurance coverage, but they cannot use the funds to buy comprehensive health insurance. They can, however, use the fund to pay for short-term health insurance, dental and vision insurance premiums, and qualified medical expenses. Benefits of health reimbursement arrangement. HRA can be used to pay for qualified medical expenses, which include prescription medication, insulin, an annual physical exam, crutches, birth control pills, meals paid for while receiving treatment at a medical facility, care from a psychologist or psychiatrist, substance abuse treatment, transportation costs incurred to get medical care, and much more. Thank you. When health insurance doesn't cover your bills. Health insurance is supposed to protect you from financial ruin in the event of a medical emergency. However, for millions of Americans, this definitely isn't the case. According to the Commonwealth Fund Biennial Health Insurance Survey, 43.4% of U.S. adults aged 19 to 64 were inadequately insured in 2020 as measured by high out-of-pocket costs and deductibles relative to income. More than a third of that group reported struggling to pay medical bills, and 35% were making installment payment on medical debt. Among those reporting problems with medical debt, 40% achieved a lower credit rating as a result, 37% exhausted saving, and 26% found themselves unable to pay for basic necessities. Medical debt is the most common collection item reported on consumer credit reports. An estimate of U.S. medical debt in collection range from $81 billion to $140 billion, according to the Consumer Financial Protection Bureau. 1 in 10 Americans owes $1,000 or more in medical debt. Roughly, 58% of the bills in collection of Americans' credit reports are medical debt related. Consumers not saddled with medical debt may still struggle with excessive medical bills. Exclude service, out-of-network providers, and excessive copays can leave even those with health insurance coverage coping with costly bills for medical care. Here are some tips for avoiding costly medical bills. Screen providers. Before receiving services, confirm with the provider that they are in your insurance plan's provider network. For more advanced services such as surgery, confirm that all the participating providers are also in the network. Otherwise, you could incur hefty fees because out-of-network providers don't have to abide by the rates negotiated by your insurer. Confirm the accuracy of insurance information. Each time you health insurance change, share the update information with your provider so that your claims are not processed using the old policy still on file. If you don't, your claim will be rejected and you may have to cover the cost of treatment. While it's fairly simple for the billing staff to resubmit the claim to your new insurance company, you could still end up in the hot seat with the collection department if you don't get everything straightened out in time. Even worse, you might end up paying for services that should have been covered under your policy. Request itemized bill. Medical billing specialists process thousands of claims, so mistakes are bound to happen. Various groups have provided estimates about the extent of this problem, ranging from an error rate of 7.1% for paid claims according to the American Medical Association to reports of errors of up to 80% of claims from billing review groups as reported by CNBC. For this reason, you should always request itemized bills and carefully review each line for duplication, services you didn't receive, price discrepancies, and any other issues. If you spot inaccuracies, immediately reach out to your provider's billing department to resolve any issues. Compare quotes for services. Who says you cannot shop around for medical providers? In fact, the Affordable Care Act requires hospitals to list prices for all the services they provide. Unfortunately, a patient entering hospital treatment for an emergency medical condition cannot possibly know what services will be needed, much less if they are available at a lower cost elsewhere, limiting the utility of such lists as comparison shopping tools. Only 34% of respondents in a 2021 poll even knew such lists are available, and 53% say they understood their insurance plan only somewhat, versus 33% who say they understood it completely. The same poll of the insured found that more than 4 in 10 have received an unexpected medical bill, and 75% were concerned about financial hardship as a result of medical expense. While the U.S. healthcare system is clearly a long way from useful price transparency, the more questions about cost, coverage, and provider alternative you ask, the less likely you will be to face a nasty surprise later. Thank you.